Hi, this is Elliot Life Sage. I want to go ahead and do a quick update. Like always, none of this is financial advice. Always do what's best for you. I've been giving a lot of my updates in my live stream in the first part of my live stream videos, but today I decided to just do a quick market update and kind of give an idea where I think things are heading and where we're going. The Dow Jones looks like we've got this top formation forming here with the left shoulder head, and we should start to form the right shoulder as this wave 2 plays out. It looks like we have a 1, 2, 3, 4, that 5 that finished, and now we bounced in wave 2. How long can wave 2 go on? It could easily go even higher in this double correction up, something like this, something like that, and then fail. Or it could be more bearish and already have peaked because there's your wave 4, and so this is a very susceptible area, so it may never come back to this peak. If that's the case, then I believe we're still in, haven't seen the wave 3, and if you look at the Japanese yen and some of the other instruments, it seems like that this is possible. If we do go deeper, then we may be just looking at a corrective pattern for potentially more highs as either wave 5 extends or the larger degree wave 5 extends with some support. So that's what we're looking for. Some definition on what degree correction we are in right now. If we are in a much higher degree correction, a monthly or even the grand super cycle, I would not expect this to rally anymore. I would expect it to accelerate lower into the end of the year and early next year have a catastrophe the first couple weeks if it's a higher degree. If it's not, if we are going to extend either the wave 5 since since this pivot here on April 24, or we're going to extend this wave 5, we want another follow through day to the upside next week like we had yesterday. So this is the count. Let's go to the bigger picture on the Dow Jones, the long-term chart, and see where we are at with the Dow Jones. Again, my stick chart, we're right getting close to the oh shit target here. We're getting close to the area that it has to bounce right around here. The next area is at 36,000, and it would probably be a free fall sell-off down into this area. And if we break this, then it's pretty much the stock market bubbles burst, and we'll have the 1929 panic. And this will probably play out as that if this happens. If it not, the bubble continues. As you could see, though, we're in the vertical phase of the bubble, so the bounce should be violent and vertical, but we didn't really see that. If we would have closed at the highs, that would have been a better sign. So this is actually worrisome how we faded about, I would say, a little less than half the gains that we had on Friday faded. So we really need to see this follow through with some intensity next week to say that, yeah, no, the bubble continues and we'll go even more vertical. Wave 5 will extend and the market continues its journey higher. The stochastics, let's take a look at what we have. The daily cycle, pretty big reset on the daily cycle here, and that's good, but the weekly cycle is really just getting started. It just started its journey lower, and this probably will continue for quite a while. And so that tells me that we need to be careful getting too euphoric, because even if we could bounce back, make another high, extend 5, we'll have even more bearish divergence on the weekly, and we'll pull over. So these would be opportunities to get light in positions, take profit short. If that happens, if it doesn't, which it could, we'll have a free fall sell-off as the weekly cycle takes over the market, and then the monthly cycle will also take hold and we'll enter into potentially a much larger bear market. As you can see, the monthly cycle already broke this November 23, October 23 pivot. So we have a monthly and weekly cycle reset, bearish. and there's not a lot of room for error on these charts, so it could create acceleration lower, panic selling, and the daily can go even more oversold, right? This doesn't mean anything. We've seen it can go much lower at times of real panic. So it's again, you need to be very cautious. There was some good dip buys here in individual stocks. I posted on my Twitter. They rallied hard, and it was probably prudent to ring the register on those gains, and then go back on the sidelines and see what's going to happen. Versus trying to hold positions like it's a bull market, because we are in a bear market phase on the weekly cycles and the monthly cycle against October lows. The daily cycle's bearish, looking for a pivot that maybe we have here, and then I think we'll continue lower, at least one more swing lower. That's my guess. All right, let's look at some of the other higher time frames. SPY. SPY, again, the daily cycle still has more room to go. Lower, probably being held up by technology. The weekly cycle has not broke yet, but it's very close to doing it. The triple Qs, weekly cycle, I think broke on yesterday. Here we go. We just broke, so now the technology should be entering into some kind of bear market on the weekly time frame, and that sell-off should continue lower for now. And the labeling on this 5, by the way, is an ABC 1-2, ABC 3-4, ABC 5. So it was a ended diagonal label. That's why it was a little it was not an impulse. That's why we ended it here that way. So technology hasn't even started its decline. The Dow is well into it, but the technology sector hasn't even started. They're just starting the sell-off. That's why I think we could go lower, a lot lower, and the VIX could go a lot higher once technology really gets going on the downside. If this is a wave 5, we should lose the whole wave 5 at least. But if the bubble popped, it could go all the way back and lose this entire wave 5 all the way back down to 260 eventually, or hitting this long-term trend line. So technology is in a very susceptible position to a major correction too, but it hasn't really entered that yet like the Dow Jones. IWM, let's take a look at where we are with the IWM here. Longer term stochastics, again, weekly cycle just broke down. Monthly cycle is about to break down against the October lows, so we are entering in a much bigger decline. So we have started our descent into a larger degree correction. So what does that mean? It's like the bounce, the way you trade in that is you kind of have to use the volatility to your advantage on days like yesterday, in and out of positions, reload shorts, take profit. It's great trading environment for day traders, not so much for long-term investors or buy and hold or swing traders, unless you get lucky, like the August lows. But here you go. This is it. Sorry, here. Let's go back to the SPY. So the SPY here you go. You got this. Again, I'm looking at this right now as like some kind of leading diagonal forming in the SPY. So we're moving in 3 waves down for a 1, 2. And so we would expect a 3, a 4, and a 5 with a lot of overlapping type wave action. If it's a lead-in diagonal, it doesn't have to do that. The next target is 569, and that will be the neckline of this top left shoulder, head, right shoulder here. Hold on here. Not sure what happened to that, but as you could see here, we're gonna have left shoulder, head, great area of support. Should get another pretty good relief rally, and then another low, or this could be a bottom where again wave 5 could extend, wave 5 could keep going. We don't know how it will play out, but all we know is more than likely it will end up here, And then we'll have to wait and see, will this play out and extend lower and go down to the much lower targets. We don't know yet, but I believe we'll still head down. And then technology impulse down in 5. We have a 1-2. It could swing back up. Since it's 5, more than likely it should take another swing lower down to 492. It could have already started that descent, but like I said, it could still have another bounce higher and then start its descent a little later. The VIX is looks like it's trying to reload. You have a 3-swing move, and you're coming off of that, looking for this trend line to break to signal the next leg higher is in progress. The VIX is outside of its wedge with a higher high, so I would expect the VIX could continue higher and want to see another swing higher into this general area. We always wanted this area to get retraced from this entire move up at 60. This is the area we really wanted to get back to. Before then, either we could really grind much lower again, or it could hit escape velocity and take this high out. But I do believe we're in this connector in the VIX, and how it plays out is going to be tricky, but you'll have to decide how you want to trade that. How you want to trade it will be, you'll have to figure that out. We could still see it hit 17 a little lower down in this area. This is kind of the area of support I'm looking at. This would be a little premature, but anything's possible. And then let's move on to other bigger instruments like Bitcoin. So Bitcoin moved down in 3 for a pivot here, and now we're up in 3. It could already be ready to take its journey down. If this is the high, this will bring us down to the 84,000 target, which is what I want to see eventually tagged in this correction. We could also double correct up to 103, and then the target is lifted to the 88 area. But for right now, I do think Bitcoin needs one more swing lower. So chasing Bitcoin here is a little dangerous. And the reason why is you have a lot of divergence at this bottom that I don't particularly like to see, especially on this time frame, on this 45-minute cycle. So I worry that this won't hold. Now the 4-hour, let's take a look here. The 4-hour divergence does look pretty much like it did get erased, but I think the 45-minute cycle is concerning to me that it will fail, and you have to be careful because that will tell me we didn't really have a nice 3-swing structure here. It was maybe impulsive, and here you can really see it's just 3 and not 5. So I don't see how I can label this as an impulse and a corrective move, an impulse down, perhaps 1, 2, 3, 4, 5. But if that's the case, then it's an A, B, and we'll still go down. But the 4-hour won't show that either. So that's why I have it labeled this way. So I still think Bitcoin is a little dangerous to chase it in this X wave connector. So I just would be cautious chasing Bitcoin here and wait for the daily cycle to get more oversold. And the weekly cycles should hold up. Now, we do have in the back of our mind the bigger picture. What degree correction are we in? Again, with Bitcoin, we mentioned I think we're in a 1-2, 1-2. But some people feel we're in a 1, 2, 3, 4, 5. If that's the case, we should see significant acceleration lower, and then we should break the 73.8, and that would pretty much signify that, yeah, that was the count, and then we will correct the whole cycle, and then that should bring us back down to 44,000, essentially, and in this bull run phase for the next 5 to 6 months at least. That's possible, but we need to wait and see how this plays out. We haven't ruled that out yet. Oil is also signaling that deflation may be coming. When this sea leg comes, I believe the markets will be hit hard, and that will be a downturn in the markets when this finally breaks down and we're close to that moment. Gold also needs more downside in this three-wave move. It's in the connector wave of the final leg lower that should have failed. If you really look at this connector wave, this is why I worry that the indices may not have any really big push higher next week, because gold may have already peaked here, ready to turn down, which could indicate dollar strength will re-enter the market. If this is accurate here, and that would signify risk off to me, something like this. And then silver, also, this was now support, became resistance, it got rejected, so should be starting its journey lower, hopefully taking the market down with it. The dollar index should be bouncing in wave 3 soon of this pattern. So here you have a pattern here. You have a big 1, 2, 1, 2. We need a 3, a 3, a 3 in the dollar. So that also signifies a lot of panic should be coming into the market soon to propel us to these higher levels before a much bigger decline, eventually coming up to this ultimate target here. The Japanese yen also may have started its turn lower on Friday here. So this may have been smart money trying to dump the market on the strength. We'll need to wait and see. Will it continue higher and follow through, or is this ready to go into the corrective mode, or Japanese yen strength? We're close to that moment, and that should create significant downside in the world markets, like it did back here into August. This was the VIX spike to 60. We haven't even begun that dynamic yet. Once that happens, but the VIX is already making moves, spiking already. So the fear is even more, apparent, and yet real fear hasn't really entered, which it will when we're down in this area as the yen eventually takes out 139.6. This is the carry trade part 2. So this should eventually play out with this lower low sequence. We're looking for it to fail in 3 waves and down. The 10-year is continuing higher to confuse a lot of forecasters and analysts. This could be a couple things, so that could be a 3-4 right there. So we have to keep an open mind that perhaps we have a 1, 2, 3, 4, 5, and we'll get a pullback again down for another 1, 2, 1, 2 setup, something like this. But with gold and silver where they are, I would be concerned that you don't have another setup as a 1, 2 and another 1, 2 here playing out. So you have to be careful. This could create a rate spike. That's what I would be cautious of. But the higher high has given us confidence that we should continue higher, eventually taking out this high, and then the trend will be clear to everybody where we are heading with rates. All right, so that's my quick market update. Like I said, I would expect more downside in the market after this bounce here plays out more. I believe technologies needs some more downside. Perhaps you can get this little bump up here and gives an opportunity to lighten positions or short if you want to at 533. Perhaps it could do that. Or, like I said, it may already be finished. Here's the 4, may already be finished, and we're just going to kind of grind lower and then just kind of fade away. And the gain in this rally was just a sucker's rally, and this probably, if I look back, is probably will be a sucker's rally, and we'll just we'll have more downside. And then here will be the opportunity for either new highs, extend 5. Or you get the 4-5, and it's the sign that you're in a massive new corrective phase that no one's prepared for. All right, guys, that's all I got. We'll try to do a live stream today if I can, and or tomorrow. But good luck, and we'll see what happens next week.